What's up, people? So today we are going to be going over today's trading and such just like that. So today, I didn't trade today really because there wasn't an account to trade on, and due to the fact that I didn't have an account to trade on. As you can see, the market data is delayed. I'm pretty sure it's delayed like 10 minutes, so I literally could not trade. I just couldn't trade. So I just did like just some positions that I would have taken if I could have traded. So there was this one that I was looking for after around the market open, but this technically played out because we closed above, and you might be wondering where the actual high would be, but it would be right here. And so price took that out, so that worked. And then after this one worked, price, there was an S&T, I'm not gonna check, but there was an S&T, I'm pretty sure. Wasn't. And then price just jumps from here. Not really giving us an entry. There was this clean fair value gap, so price, so there's a bunch of order blocks right here. Price closes under energetically, almost a fact that we know we're closing underneath this right there. And we get this reaction into this fair value gap, never closing above constant encroachment. We react lower, closing below this. And now you have to understand that this is technically an order block in a higher time frame. So what you can go right here, that I've noticed, you go from the top to here, to the bottom right here, slide it over. Price never closes above this, above the constant encroachment of this fair value gap, of this order block, and it never closes above this fair value gap. So this short would have been good, but there's never like a clear fair value gap. If there was a clear fair value gap, like let's say right here, this would have been a great entry because price is delivering from these things. And the reason why you'd be bearish is just because we had this displacement lower, and I probably wouldn't be going short just right here, just keep it safe. But once it just keeps dumping, there wasn't any entries in between here. There's no reason to trade past here. So there was, when I saw price disrespect this fair value gap, I was like, okay, price will probably close higher. But the reason why I didn't take a trade is because you can just see the amount of fair value gaps. There's one here, one here, one here. So you don't know which one's going to be correct. But it turns out all kind of ended up working out fine, because we close, tap back in, never closing back below, as you can see with this candle, and then displace higher. And here we do the same. And then here we do the same. We close above, tap back in, tap the constant encroachment. If you think this stuff is just random, then you are completely incorrect. This is algorithmic. And from here, we're looking for bearish fair value gaps to be inverse to go long. And the reason why we'd be looking to go long is because we're just going with the daily, like the way the daily candle is going to come out. And if we went down this low, we're probably going to have some sort of retracement, at least to back to a premium for shorts, or a discount for longs. This is the discount. So we had a discount to longs, so now we should look for longs. Or if we're going short, then we need a retracement back up. So the longs are valid. So yeah, we took out this low, and then we tapped back into this consolidation zone. We did not take out this low. We have this low now for targets. You see how by the days go by, it just kind of, the liquidity keeps on being built and engineered. So as you can see, now I'm going to show you through just some of the macros. So as you can see, there's this one where price closes above, and you could have gotten a good long position, but I didn't take that. What I noticed was this one. So price is coming down, and we tapped in this fair value gap. We never closed below the constant encroachment. As you can see, the 0.5 level is never closed under. From there, we have this clean fair value gap. We also have a fair value gap right here, but I wouldn't say that was clean. I would take the lower one. This one gets inversed, and we have a change in state of delivery right here. We create this order block. So this would have probably been the optimal entry, but I took the entry once we tapped back into the constant encroachment with this fair value gap, and I put the low, the stop below this fair value gap. From there, price Yeah, as you can see, the trades that I take end up being these huge moves, but you just have to be able to hold it for long enough. That's the thing. So I only had my stop to here. Wait, no, I had my stop to here, and I eventually hit. And that was a good trade. 40 ticks would have been like 200. I mean, 40 points would have been like 200 ticks. So you know that's good. Then we had this one because right now we're looking for a bearish fair value gap to go long. And so we get this fair value gap, and you could have gone long to the right with the tap back in. And you would put your stop right here at this high, and you're gonna put your stop probably right here because price should not tap back into it, and price would have just 17 points. You know, all these ticks you could have had. And then price is going lower, and on a higher time frame within this, we're reacting from it. To be fair, we're reacting from this fair value gap along with these. It seems minute 3 fair value gap, but price is reacting from this fair value gap. Number closes above. So now we have these like kind of equally engineered highs. So we're looking for a displacement through with the fair value gap, which is what we get, and then we get this stuff back into this fair value gap. We technically inverse this fair value gap that we created, but that's fine because there's this fair value gap, and if we don't inverse this one, we'll be alright. And it doesn't inverse it, and we get this quick recovery up closing above this. So once we see that, we're definitely going to be looking a little bit long. So we're going to be this changes their delivery technique from my point of view, along with the fact that we're tapping back into that minute 3 fair value gap. And then inverse this, tap back in here, so you could have found an entry right here, and then taking it to this high. So I'm going to delete this lipstick off my chart. I'm going to what I see going to tomorrow also. Some news. I'm starting another funded challenge, and I'm really excited. Not excited, I'm just really ready for like this challenge in my life, and I think it's going to be beneficial, and I'm going to be really good on this challenge because I've learned a lot in the past couple of weeks. Especially about myself. I learned a lot about myself, which is kind of the end goal when you're thinking back at it. Like, you want to be learning as much as you can about yourself. Like, there's nobody else but you that you want to be learning about. So that is some good stuff. So going into tomorrow, this 4-hour fair value that the price tapped back into this inverse fair value gap. It's going to 15 minutes real quick. Just want to grab some lows. So we have this low right here. We have this low right here, then this right here is a inverse fair value gap from today. So this is a bullish inverse fair value gap, so there's that, and then we have this high that you can see price might want to take out before it truly moves higher. So these relatively equal highs right here look a little bit too clean. So let's go back to the daily. So we got this bullish. 4, tap back into here, so good. Hop back to the 15 and turn on this. So as you can see, in the last couple hours, you know, we'll hit this adjustment down. We might take out this high we've set in today before we move lower. If we were to move lower, we'd want to inverse this and probably create, but I think we'll move higher, take out these. Alright, thanks for watching.